That was weird. My intro's not playing. What's going on? It's because it's Monday. Where's my music? Where's my music?
Run it. I can't take no loss. I don't even know what it costs. I hit the ground then it go off. Yeah, hit the ground then it go off. Yeah, I can't take no loss. I don't even know what it costs. Yeah, I hit the ground then it go off. Yeah, hit the ground then it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
That is more like it. Good morning, everybody. Happy Monday. Welcome to the morning show here on Stock Market TV. I am Spencer Israel. I've got JC. I've got Steve. I've got Chart Wizard Alfonso. Of course, we are all back. We are all home in our home setups with our desks and our monitors, and no one is traveling, and it feels great to be all together once again. Full cast back today. What are we talking about? Let's see. We're talking about Bitcoin, still of interest. We are going to be talking about, if you saw JC tweeting over the weekend, tweeting about the SPY versus the equal weight SPY. We'll talk a little bit about that. We will talk about seasonality as we approach the end of the month and into what is, usually seasonally a bullish time of the year. And our guest today is Christian Tharp. He'll be on in about a half hour. So you know what to do. Good morning, chat. Hit that like button for me. Let's roll. Having all sorts of problems today. Let's try that again. Take two. Oh boy.
Good morning, Spencer.
Good morning. I am firing on half of all cylinders this morning, apparently. We are here.
Are you did you get enough of Strazza and I in real life last week? Are you over it? Are you ready back to hang out with us virtually?
Yes and no. I like it. It's fun to hang out in person, So yeah, I mean, it's fun to hang out virtually, but it's also fun to hang out in person. So
you know what I realized, Strazza? You know what I realized?
What'd you realize?
We didn't have any bull market lunches while we were all together. Granted, we were busy doing other things. We weren't just sitting around having long lunches. We tend to do that when we go places, and it's Strazza looks at me. He's like, "You want to get the hell out of here?" I'm like, "Yeah, let's go." We didn't have that this time. So is it because we didn't have a bull market lunch because it's not a bull market, or we were just busy doing other things?
I think we're all like silently Perlmaning in our own way. So I think we were okay with skipping lunches. And
wow, silently Perlmaning?
Don't speak for me. I had my worst week in a very, very long time.
Listen, we ate plenty, probably far too much. So I wouldn't overthink the lack of lunches.
Listen, all I gotta say is Strazza and Spencer both look thinner on video than in real life.
Jesus.
So in case anybody's wondering, well, there's that.
Apparently you sent some pictures to Pearls, and he was talking about my belly.
The dad bod, the Strazza dad bod. Yeah. Now, Strazza's looking good though. A little bit of Perlman program over the last few weeks. Spencer's on the Perlman program. I'm going on. What are we doing? We're on. I'm on an 8-16. I'm on a 17-hour fast right now, so I'm feeling good.
Yeah.
When you treat your body well,
how do you?
What?
How do you fast on a football Sunday? That's what I don't understand.
Yeah, crazy, man.
Because I had wings in the first quarter. I had a burger in the fourth quarter. I had some yogurt during victory formation.
Oh, it started. Oh wait, 17 hours. So that's not actually that.
Yeah. So right at the end of the football game, I was good.
Okay.
Hung out with the kids for a few hours, put them to sleep. And you know the hack? The hack is to go to bed early because you can't have late night snacks if you're not awake.
JC's weakness is the late night snacks.
It is.
My weakness is the all day snacks. I will say I had enough fried chicken for all of us yesterday while I watched the football.
Let me just say that, first of all, I love fried chicken. Perlman would be very proud of this conversation. Shout out Phil Perlman. Now, enough with this health crap. Let's make some money, huh? We got some things to talk about. Most bullish time of the year, Strazza. This is it.
Everybody enjoyed their vacation last week. Now we're back in business here.
Vacation's a strong word. We were working hard, bro.
I'm kidding.
My wife thinks I was on vacation. She's like, "Oh, you're just on vacation, drinking with your friends." I'm like, "You not listen to anything I say?"
So good to see Morgan and the kids.
All right, should we talk state of the market?
Just happy to see you guys too.
Things are.
She didn't see everyone. She didn't see me. You know why? Because I got sent out to get coffee, like an errand boy.
I don't think you realize, like, during video shoots, just how important that role is.
It is, Spencer. You're like the 4th or 5th most important person there. So go hit it. Well, I think this is the chart that stood out to me. I wouldn't say it was a surprise, but when I was really looking at it, I think it really made an interesting point. Strazza, you and I, for most of the year, have found ourselves asking each other, "Man, is this now? Is this relationship gone forever? Is Bitcoin going to catch up? Are tech stocks going to catch down? Are we overthinking it?" Right? These are the conversations you and I have been having, for most of the year. Like I said, when tech just absolutely exploded in the first half of the year, Bitcoin did not really been struggling since the spring until recently. And now here we are making new multi-month lows in technology stocks while Bitcoin's making new 52-week highs. How about that, huh?
When we talk about correlations, we'll just throw out, oh, these two assets are correlated, right? But we don't ever really specify a time frame for a correlation coefficient. You don't go in, and if you were to run the correlation coefficient on something like these two assets, you wouldn't do it over one period. You probably wouldn't do it over 10 periods. Probably do it over at least 50 periods, right? Which is 2.5 months almost. And there's a reason for that, because they will dislocate, over a week time frame or a couple days, and it'll completely fall apart. But then it reasserts itself, right? The relationship reasserts itself over time, which is why, like, for us, we'll look at correlations with 100 days, sometimes 252 days, right? Full year. And the reason for that is because there are periods when the correlation isn't as strong, and then it strengthens again. And I think that's what you're seeing here with stocks enjoying a really nice, first half of the year while Bitcoin just kind of went sideways. And now all of a sudden stocks are coming in a bit. Bitcoin's closing that gap. And it's just so normal in terms of the relationships that we study.
What's really interesting is the lack of new lows. Go to the next chart. I'll let Strazza talk about what's happening here. But even with new lows in the S&P and other indexes in the back half of last week, there were fewer stocks making new lows, which is fascinating. Something definitely got to be front and center coming into this week. Why aren't more stocks making new lows? Why are fewer stocks making new lows? The New York stock, by the way, the New York Stock Exchange new lows list peaked almost a month ago. Just an FYI.
JC, not your best take. I'm not.
What do you mean not my best take? It's just math. What do you mean? First of all, it's not an opinion. I'm just reiterating what's taking place. On the new lows list on the New York Stock Exchange peaked almost a month ago. I'm just saying.
On a net basis, that's not true. So I will say that, right? Because new highs.
No. Forget net. On an absolute basis.
I understand what you're saying.
Did more stocks on the New York Stock Exchange make new lows last week, or did they not?
Net new high lows did not peak.
That's a stupid. Speaking of
bad
takes,
there are no new highs. New highs.
No, because if you're closer to new 52-week highs in the market, right? Let's just say the S&P 500 is closer to new 52-week highs. The net new highs, new lows list, of course, it's going to skew towards the new highs, right? Because you're way closer to new highs than new lows. Just like when you're near new 52-week lows and nowhere near new 52-week highs, that's going to stay skewed to new lows. Like the net situation, I'm not a huge fan of. I think you want to look at it on an absolute basis. That's my take. That is an opinion on for me. The fact is that on the New York Stock Exchange, the most important stock exchange on planet Earth, so maybe if you're in Mars or Jupiter, there might be more important ones over there. But here on Earth, for us mortals and Earthlings, the New York Stock Exchange new lows list peaked almost a month ago. That's not an opinion. That's just a fact.
Okay.
Can we move on? Can you tell the folks why these lines matter? Squiggly line up, squiggly line down. Why should we care?
Yeah, really big level. 430, I think, got a lot of attention. But for me, it was really 420, right? So this represents a
See
38%
what he did there? See what he did there?
what, 420? So this for me represents a critical level, right? It's the 38% retracement of the advance off of last year's lows, and we bottomed around this time last year. It's also the pivot highs from Q1, big level there. But most importantly, it's the anchored VWAP from the 2022 lows, right? So a major cycle low, and the all-time highs come in and they're pinching together. You see right here, right at current prices. And boy, did we just slash right through them last week. Critical support levels were taken to the woodshed last week. And that's the case for the broader market. At the index level, the sector level, the individual stock level, there are a ton of new lows at the index level. The market has not been this vulnerable or this scary for a year now, right? Since we bottomed. This is the most dire things have looked for the broader market. I think we'd be remiss not to talk about the Russell 2000 in the state of the markets today. Did you plan to talk about the Russell 2000?
Nope.
Okay. So the reason the Russell 2000,
I like the, listen, you could focus on the smallest and least important and least relevant stocks on this here planet of Earth, or you could focus on the most important ones.
JC,
right?
The Russell 2000, of all the indexes that we have, which one would you say looks the most like the average stock or most stocks?
Well, the average investor loses money, so I'm not really concerned about that. I would say that the value line geometric index, representing the median stock, closing once again 2 weeks in a row at the lowest levels in a year.
Right.
That is probably the worst looking chart. That's probably, if I was trying to make a bear case here, that one would be front and center. I am coming into this week looking to put money to work from the long side, looking for buying opportunities. I'm open-minded to some shorts as well. But I am definitely, I've got a ton of cash. I haven't had this much cash for a long time. I mean, I haven't had this much cash for this long in a long time. So I'm looking to put money to work, man.
So if I'm hearing this right, you're employing the technical strategy of catching a falling knife. You're not waiting for any signals of some sort of tradable low. You don't want to buy strength. You just want to buy this disaster as it's
my friend, Mr. Strazza, who chooses to not listen to anything I say. I learned from a wise Egyptian man many years ago that if you trade the averages, you're going to get average returns. So I am not trying to catch any falling knives anywhere. Sometimes perhaps we do that, and I'm okay with that because we know that that's what we're doing. Like Tesla earlier this year, we were catching a falling knife, but the risk versus reward was very much skewed in our favor. I'm buying strength. I like UNH. I want to buy more. Continues to hang in there really well. I'm not buying the S&P 500. Do people do that? I'm buying strength. So no, I'm not catching any knives there, Baba Louie.
I did last week, I guess. I mean, this is a long-term situation, something I'm not going to look at for years, but I bought Google on Friday.
Oh, so you also are not catching falling knives.
It's not a trade. So it's a little bit different.
It's not a trade. It's a little bit different. What is it? It's an investment.
Yeah, I'm not.
Yeah, listen, I see what you saw there. That gap up from late July, filled that gap. Let's go. Yeah, I get it. I don't have. And then what? You're gonna stop out at the lows? Last week?
No. I'll give this one probably like 110. I'm not looking to get stopped out of this unless there's some sort of disaster scenario.
What about the Microsoft strangle we put on last week? I like that trade.
Right. So these mega cap tech stocks, I'm just realizing this year with the AI craze taking place, I'm realizing that I'm really underexposed to a lot of the best stocks. Right. I think it's easy for anybody to sit back and say, boy, I wish I owned more of the FANGs or more of the biggest, best stocks in the world. Of course, we all do. But for me, significantly underweight. and they're good stocks. So I am looking to buy weakness. And I'm in Amazon now. I'm in a lot of these guys.
Does it matter to you that this week begins the most bullish time of the year? Does that matter to you at all?
No, not really.
Does not matter to you at all.
Not
what about why don't you zoom out of the 4-year? Where's the 4? Oh, do we have the 4-year cycle? Throw the 4-year cycle up there.
It's important context, but right now, price action and always trumps anything else, and we are literally collapsing. This is a collapse. I said a week ago.
Spencer, can you throw up the 4-year cycle sometime this month? There it is.
I said we're on rollover alert. We have since rolled over. This is a rollover.
We were on rollover alert in July, brother.
No, we weren't.
Oh, we weren't?
I very much disagree. We were at key levels, inflection points. We were saying these have to hold, right? I'm talking about small caps.
You said if you're gonna sell anything in tech, what are you selling? I said calls, and you laughed at me.
Yeah, it was very tactical of you picking a top. I'm not in the. I don't try to pick tops.
We ran into former resistance levels. The market had not proven it could break through those levels, and it still hasn't.
You get cute sometimes, and you're very good at it, but I don't. I'm not.
Was that cute?
Yeah, you picked the perfect top this summer. That was great. I'm very proud of you. It's not easy. Seriously.
It wasn't a top. We ran into those former resistance levels.
Yeah, I have a simpler mind.
The top was 3 years ago, 2.5 years ago or something.
Yeah, okay, short-term top. Anyhow, seasonality. Yeah, it's been great. And wouldn't it just make so much sense to completely fall apart? Because
that's what they said a year ago. Funny you said that. They're like, oh yeah, the world's about to end, blah blah blah. All the perma bears launching their ETFs that blew up a few months later. Like, remember how hilarious that was? Remember the Twitter Spaces on the weekends about
Jeff is a good friend of ours, but even he would tell you there has never been a bull market for seasonality, and Jeff Hirsch himself like this current market. I mean, he's the most popular guy on the FinTwit these days, and for good reason. It's not sustainable to be this tight. So I think if this relationship broke down in a big way and the current trend, the actual trend, really started diverging from the seasonal trend, that would make a lot of sense. It's been too spot on.
So for us, at least for me, I think Strazza agrees. We don't necessarily position ourselves like we don't actually sell in May and go away. We don't actually buy in October and get ourselves sober. I've actually been doing quite the opposite over the last week. Drinking a little too much wine, and last weekend a wedding and a Dolphins Philly game. I mean, I did a lot of damage to my body, so I was not getting myself sober in October. But nevertheless, when we look back at seasonal trends, and we know that the recent months historically are weak for the market, and it's when the market ignores seasonal tendencies that we want to pay closer attention. And what we know is that the market did not ignore seasonal tendencies. The market was weak when it was supposed to be, so it's perfectly normal. I'll go back to 2016, going into the Trump election, where everybody's like, "Oh my God, if Trump wins, the market's going to crash." Nope, it was actually the exact opposite. We've never seen a rally that strong in American history. So boy, did the market like that Trump election. But we knew going into that election that the market was very strong during a seasonally weak period. So the market was ignoring those seasonal trends, showing us underlying strength when it was supposed to be weak. In this market, the market was weak when it was supposed to be weak. So now that it's supposed to be strong, if the market is not strong, that is the signal. So I just want to reiterate how I have liked to use seasonality and has been very, very helpful over the years. And I feel like most people don't use it that way. They're like, ha, 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 seasonality didn't work. Right. That's the signal, dummy. Right. Right. You with me on that or no?
Yeah, 100%.
All right. Straz and I agree. How about that? One for the good guys. I want to talk about one more thing. What time is Christian coming on? Christian Tharp in the house. Shout out, Christian. What are you bringing him in right now?
Yeah. I mean, it could be any time between now and 9, right? It's sort of a
I want to talk about something.
A window. So why don't you
finish something important? Let's talk about something important. Over the weekend, Spencer was just teasing out how we were talking about how the S&P 500 greatest momentum strategy of all time, buys more of the best stocks and sells the worst ones, or doesn't buy them at all, right? Which is pretty good strategy, right? You're watering your flowers, you're cutting your weeds, right? The S&P equally weighted index does the exact opposite, right? Sells the best ones, sells the best performers, and buys more of the worst performers, right? In order to maintain that equally weighted status. So what's interesting is when you look long term, however.
Did this surprise you, JC?
What?
The long-term performance comparison?
It surprised me. It's well, let me get to my point. My point is it's a sector rotation thing, right? If the largest components of the S&P 500, if those sectors are the leading sectors in that cycle, the cap weighted index is going to outperform, kind of like this year, right?
Okay.
Last year, on the other hand, you had the largest components, the sectors that make up the most of the S&P 500, were actually underperforming, right? It was the other sectors that were doing the best, which is why the equally weighted index was outperforming, right? Which is my point. So hold on, go back up. So here's the year-to-date returns, right? S&P 500 up almost 9%. Equally weighted is actually down, right? Mm-hmm. People are constantly talking about how that's a bearish argument for the market when it's actually not. The cap weighted, the equally weighted index regularly underperforms in bull markets. So that's not a risk on, risk off gauge. It's who's been in favor this year. Now come out again, go to the next one. This is the 3-year returns. The equally weighted index is actually outperforming. And a lot of that has to do with the fact that these tech stocks and growth and discretionary that make up a big percentage of the S&P 500 had massive drawdowns in 2022, right? It's been catching up this year, but still hasn't caught up after those drawdowns, right?
I've thought a lot about this. I don't think there's ever a situation where the right advice is to tell an investor to be in the equal weight version. I think it's awesome for information. I'm so glad that we have these indexes. I think as an investor, with a mindset of I want to make money and retire well, you buy the cap weighted version every time. I think that growth outperforming value is more of a secular trend. The growth outperformance, I think, is something we can count on more in the future. Those are the better companies. Ultimately, you want to ask yourself, do I want to own more of the best stocks or more of average stock? You want to own the best stocks.
I don't think it's universal. I think there's a time and a place. I think the bigger trend here over growth is the outperformance of the large caps, the big getting bigger. I mean, granted, a lot of those are growth stocks, to your point.
Another
reason, that's the big trend, right?
But still another reason to be in the cap weighted version. You're going to have that mega over large, right? I think it's kind of cute expecting that most stocks will perform better than the best stocks, right? When you look at the
10-year returns.
Hold on. When you buy the cap weighted version, when you buy the cap weighted index over the equal weight, right? You need one thing to happen. You need the best stocks to do well. They will drive the performance of that index. They will drive your returns. You need just the best stocks to do well. And we saw that. We saw a situation like that playing out this year, right? Where the best stocks were killing it, most stocks not doing well. You got the S&P up 8%, equal weight down like 4%, right? So only the best stocks need to do well for you to perform well if you own S&P. But all stocks or most stocks need to perform well if you're going to make money off of RSP. I just think it's a harder thing to accomplish, right? You just have a handful of stocks doing well. Great. You're making money in that index. Or you need the whole market to do well.
I think there's a time and a place for everything.
Wait, if you go back to the 3-year returns, that's interesting only because it's cherry picking from, essentially the beginning of maybe not the very beginning, but towards the beginning of a large asset bubble, right? And where we literally saw are seeing $1 trillion valuations, and you would think,
but the market peaked. The market peaked. What do you mean? The market peaked
no.
later.
Breath was great in 2020 and 2021.
But the point I'm trying to make is you could say during a bubble and after an asset bubble sort of pops is like, oh, surely these crazy $1 trillion valuations must come down, and all you get is 1 percentage point of outperformance of RSP over SPY. You would think it would be a lot larger than that, is what I'm saying.
No, you know what the real answer is? You don't buy either of these things. You buy the best stocks. It's really that simple. But
yeah. I mean, I've never understood RSP. I understand RSP for like, short term periods, a year, a 2-year period, maybe even a 3-year period, sure. But I definitely don't understand it as a long term thing. So
last chart before we bring on Christian. Returns since February 2021. Punch up slide 2. New slide 2.
Important to point out that during
this is since the asset bubble popped. This asset bubble, everybody had a SPAC, the whole thing. These are the returns since the bubble peak that Spencer was just alluding to.
Listen, 500 basis points is a lot. Like that is a great deal of outperformance over not a very long time.
So these are not just arbitrary rolling 3-year returns, rolling 1 year. This is specifically when the new highs list peaked in February of 2021. This is when Chinese internet peaked. Cathie Wood was the greatest investor of all time, and all those stocks just completely collapsed from this day, right? Remember all that stuff? S&P 500 on a cap-weighted basis, still up 50% more than the equally weighted version.
Joe's saying problem is some, if not most, investors don't have the time to pick the best stocks. I would disagree. I think
doesn't the S&P 500 do that for you?
It's an education issue. I think most investors think they don't have the time to pick the best stocks, but it's just a matter of looking at a couple ratios.
And what do you think? Your financial advisor spending time looking for the best stocks?
They are definitely not going to pick you the best stocks.
Yeah, your financial advisor is trying to set a tea time. Your financial advisor is planning birthday parties for his family, and that's why so many financial advisors come to us.
If the average investor just had some introductory knowledge to technical analysis, they could easily pick the best stocks. In fact, we know a lot of people, our friends and clients and customers, who do that.
I know this obnoxious Cuban who's writing one that's going to be a must read.
Obnoxious Cuban? I have no idea.
Is he on this stream right now?
Is he in the room with us right now?
Is he in the room? If he's in the room, stay silent for 2 minutes.
Picking the best stocks is a lot easier than it sounds.
The only way to make sure you own the strongest stocks is to buy the strongest stocks. That's how I learned it.
Wow.
There are secular trends in relative strength that we see all the time, where a stock will literally outperform for decades consistently. Right? Of course.
Strazza and I made even a video about it last week.
So they're out there and they're not hard to find. We do it every day. We love doing it.
All right,
Spencer. Bring in
Christian. We got Christian here. Let's go. Christian Tharp, you ready? He's ready.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Christian Tharp, what's up, my man?
Top. Well, I tell you what's up. You talked me into becoming a financial advisor. I mean, tea times and birthday parties. I have no idea why I'm doing this,
Listen, financial advisors want to spend more time growing their business and spend more time with their families. I know a lot of financial advisors. Financial advisors do not want to be spending their whole days looking for the strongest stocks and sectors and things like that. And the ones that do are really not growing their businesses and spending time with their families. And that's no good. So, we've noticed over the years, by the way, accidentally, I wish I could tell you I was so smart to know this going in, but what we found is, we provide a lot of value to financial advisors so that they can spend more time growing their businesses, raising assets, playing golf, spending time with their families, not necessarily in that order, but generally that's what we've noticed, and good for them.
Yeah. Not going to knock it.
So, why don't you tell me a little bit about what you're thinking here as we enter the most bullish period of the year? First of all, why don't you start with your time horizon? Tell the folks, what's your sweet spot? Do you care what happens next summer? Do you care what happens this morning? How would you think time horizon wise as you're going into a Monday?
You bet. That's what's, the times that I've been on the show with you, listening to you and Steve go back and forth, like your horizons, you guys look at much bigger than I would typically, although I always like to check, right? I always like to just, kind of know and pan out and make sure that I'm getting somewhat of the trend, but I would say my sweet spot tends to be much shorter. So, not only like trying to call like what I would expect happen in the next day or two, but more of that swing trade, short trade type of horizon. So capitalizing not necessarily on larger trends, although again, that is always a piece of the puzzle. But where we act is typically in that current week. At best, we might look at things like, for example, right now we're long gold for, we went out a couple months on that one. We went a couple months out on TLT, but that's a specific strategy. Everything else, I'm very interested in what I think is going to happen Monday or Wednesday, or what I think is going to happen this week. And I think when you look at the work we do, I think it's extremely benefit breakdowns, breakouts, really, really beneficial when you look at that short time horizon versus trying to go a little bit further out, at least, in my wheelhouse.
And how much of the broad market's behavior impacts that decision making versus the individual equity that you're looking at, or is it a combination thereof?
Oh, sure. Absolutely. I'm a big fan, over now close to 20 years, being a CMT, narrowing things down and really.
How old are you, Christian? 20 years.
How old are you? How do you think I am?
Well, if you're doing this for 20 years, I don't know, 41, 42 at least.
Yeah, at least.
You don't look it.
Yeah. So we'll leave it at least, 40, 41 at least, But one of the things I coach students to do is like, what typically happens, we go out in the market, right? Might have some success, might not. Typically, eventually, the might not is coming. We're going to struggle. We learn this. Next thing you know, we're doing worse than we ever were because we have 87 different arrows in the quiver, right? So what I try to encourage to do is narrow it down, which is what I've done. One of the things I like to do when I look at markets is when things aren't in sync. So I'm a big fan of non-confirmations. If Dow and the S&P aren't playing well together, if the NASDAQ 100 and the composite aren't playing well together, if the Russell's going in opposite direction, I like to kind of just check in and make sure everybody's happy together. And if they're not, is that telling me something or not? Like sometimes like, it probably doesn't mean anything. Other times, well, wait a minute. Because if you look at some of the bigger tops and bottoms we've had, specifically tops, there's so often the major tops, there was non-confirmations there. A lot of times the NASDAQ and Russell separate, S&P Dow.
Non-confirmations in what specifically?
So I'm a big fan of, like, say, for example, you look at the 2007, 8, 9 bear market, right? S&P and Dow peak, whatever it was.
October.
Yeah. And then NASDAQ went on to hit new highs, right? I think it was in November or something like that. If you look at the recovery rally, NASDAQ went on to hit extra highs. If you look at 2015, 16 little correction, Russell and NASDAQ went on to hit extra highs. When the S&P and Dow are saying no, and if we want to go with the whole generals and soldiers type idea, when they're saying no, we're not going, right? I start to say, well, wait a minute, right? Is this one of those types of things? Same thing when you look at the, interestingly, when you look at the COVID correction, look at the S&P Dow, look at the Russell, look at the non-confirmations there. Look at just recently in July, look at the S&P's last high versus the Dow's. So when things aren't in sync and when they're not clicking, and as you know, the more those things persist, the bigger of a problem it becomes. Those are things that I catch even in my short term, because you're looking at it every day.
Yeah.
But then sometimes I'll pan out and again, kind of look at the trends. But that's something when I look at markets, when they're not playing well with each other, that I start to kind of perk up and say, wait a minute, am I being told something?
How much weight do you give the Dow Jones Industrial Average? Because this is a very some people hate it, some people love it, some people are indifferent about it. I'd love to hear your thoughts, Mr. 20-year veteran over here.
For what that's worth. Well, if we go back, remember we talked about that little Russell head and shoulders, and there's that debate whether or not it was or was not. Dow had one too, and I'm a big S&P NASDAQ 100 kind of focus, but I always say it's important to check in on the Russell and the Dow. It's important to check every once in a while. I'll throw, call an audible at the line. I'll pull up the Wilshire just to see what a big broad basket of 5,000 is doing. But, for me, when I look at the Dow, and I looked at the Dow breakdown a couple of weeks ago, I'm like, the NASDAQ was kind of holding on. I'm like, well, wait a minute. I don't know how confident I am in the NASDAQ moving higher if, the big seasoned veteran here, the crafty, quarterback here is telling me I'm going the other way, right? And so
is the Dow the crafty quarterback?
That's what I say. That's the crafty veteran, It's what I refer
Right.
to as, they know some things that, maybe it's not the cool, sexy shortstop, but, you want to listen to that 42-year-old pitcher, they've been around a while.
I'm telling you, brother. I'm telling you. Listen, you're preaching to the choir. To me, the Dow Jones Industrial Average remains the most important index on Earth here, as far as the stock market is concerned. From an intermarket complex, Christian, where does the fact that the Treasury bonds, let's just talk about TLT, the most liquid asset there of that group in terms of the ETFs, of course, TLT from 180 to 80. You want to talk about a market crash. The bond market is in the midst of biggest crash of all time. Depending on, how you're calculating it, but regardless of whether it's the biggest or the second biggest or the third biggest, doesn't matter. 180 to 80 on the TLT, the safe haven asset, I was told, Christian.
Yeah. Did you know I had TLT charts for the day? Is that how
I did not actually. This is just a legit question. Throw it up.
We have I think I had labeled them TLT1 and TLT2. One of the other arrows I always like to keep, I'm a huge fan, is momentum divergences. Quite often, I would say, in my experience, been one of the more reliable quote indicators, especially on a shorter term. But when I look back at like forecasting the 2022 bear market, it was the big monthly momentum divergence on the S&P and NASDAQ that helped forecast that. Well, if you look at the TLT, I brought up a daily and a weekly because both of them are putting in, they're putting in the momentum divergences. Obviously, they're not guarantees or anything, but I know that each time I come on, we seem to get around somewhere to bonds.
I can't have a legit conversation about the stock market without bonds. And by the way, not just because bonds are crashing. If you've known me, it's always been that way. Spencer, can we get the TLT chart, please?
Yeah, I think the first one I had was the daily, just so you can see. And it's a little hard to see, but if you look down at the bottom right, you'll see I always highlight.
I think you need more lines on the chart.
Well,
can we have more lines?
I try to remove them, from time to time, but sometimes something's going to pop up, right? That, oh my gosh, why is that line there? And then I look back.
The way I learned it is if you draw enough lines, one of them is going to turn into support eventually.
Yeah, exactly. And that's I'm not going to be able to trade without those lines. Or as I keep getting told, Christian, if you remove that line, that security could go higher. We kind of looked at this, and this is why we went ahead and took a shot on the TLT. This is the daily momentum getting put in. I kind of highlighted the one before where you got a pretty nice little rally.
Is that a 14-day RSI you're looking at down there?
Correct. And the previous scenarios where that happened, you got a nice, recovery. Didn't stop the overall trend. And then you look at the second one, and I like it, the bigger the scale, the bigger the implication. So when you pan out to the weekly and then the monthly, but you pull up TLT2, you'll see a weekly getting put in as well. So it looks to me, I don't know that the overall trend in bonds, in this case, the TLT, that lower trend is over. Each one of these resolve themselves to the downside eventually, but somebody looking for a multi-week trade.
Yeah, let's throw up Spencer, throw up the weekly. There you go.
And whoops, I think we had them reversed. That was the weekly. This is the daily, but same idea.
Oh, sorry.
Right. So when we see that momentum, that weakening, I always coach it to my students as, think of it as like pumping the brakes. The car's still moving forward, but we're slowing down, pumping the brakes, probably eventually to make a turn. Right. We're doing that.
This chart sucks so much. You can't even tell the difference between the daily and the weekly. Yeah. That's how bad bonds have been.
They look the same. So I think there might be a short-term recovery coming here, whether or not it's a big, meaningful low. I didn't bother to bring up the monthly because it's not there, but there is the potential, depending on what happens here, for a big monthly, and that's where I might look at somebody that is in for multi-month or further, depending on your fundamental view, but could be putting in a monthly as well. We'll see.
And how would you play something like this? How's volatility? Is it too expensive to buy calls? Are you selling downside puts to pay for that? How are you doing this?
Well, me, our jam is mostly sticking with calls and puts, just straight up long calls, long puts. So we went just long calls here. Every once in a while, I'll hedge with a put if I think there's a reason to. Certainly something like this kind of gives you a reason to, just because, like you said, if you go back to the other one, it's nothing but down. Right. So even if we do get that rally, how long is it going to leave? If you look at the previous ones, what'd you get? You got yourself maybe a 2-month rally the last time you put in a weekly. Before that, you put in about a month and a half. So overall, we don't want to ignore the fact that the trend is down. This isn't the most exciting, hey, I want to put all my money in this for years based on what we're seeing here, but it provides a short-term opportunity. So if I ever get a little worried about volatility, or I think, this, that, or the other, then I might hedge something with, just basically strangle it or something, or, even just shorter term. But most of the time, like in this case, we're just straight up long the TLT calls.
I love how much intermarket we're having in this conversation, a topic that is near and dear to my heart. Christian, precious metals, is this it for gold? We are on pace, potentially. I don't want to get ahead of myself. The month doesn't end until tomorrow. But if the month ended right now, this is the highest monthly close ever for gold, which is kind of a big deal. No?
Well, here you go. Go back to the previous one. Starting here, I think you and I had this conversation when we were in Chicago. I was talking about, or I was having with someone, maybe with some of the attendees there, but I was like, hey, gold has broken out of a pretty good channel there. Some might pan out and give it the old big bull flag definition. Either which way, the bottom line is breaking through. Some trend might be changing. I'm targeting that red line up top. If you now look at the other chart, that red line, extremely important, right up around 2085. Tested 3 times over the past 3+ years. I think gold is headed there, and I think this time we get through, in which case you got to target 2,500 at minimum.
Listen, the way I learned it, and in my experience, I've certainly witnessed it, is that the more times that a level is tested, the higher the likelihood that it breaks. Right? It's only polite to knock on the door a few times before you go barging in.
Yep. Tap, tap, tap. So that's why I think and as I mentioned, we got long the GLD. So we talk about, some people want to look at some of the miners, some want to look at like the GDX better. I'm like, well, if you're gonna, if you're trying to mirror gold, I'm more of a fan of just sticking with the GLD. But
yeah, if you're trying to mirror gold, then you buy GLD. If you're trying to GDX is the companies. These are two different things. Yeah.
It's like, so don't get too terribly cute. Same thing when you look at oil market, right? I mean, sometimes the XLE and the XOP don't play well with oil, and if you're trying to track oil, go with something like this. But here, we went out, and this is one of those ones where I mentioned, with the exception of things like this, we went out a couple months on the GLD in expectation of running up to, again, right around the 2085. We would probably, depending on if that happens, and second, how quickly it happens, maybe close that position out, enter a second if that were to break out. And that's where I think you're going to see gold really, if we get through that, I think that's when you look at, if you're somebody that wants to put something in your portfolio for, say, months and years, that would be the play, is getting up through there. So I think holding 2,000 last week was a pretty good sign that that forecast is going to play itself out.
And then, I understand your time frame's a little more short term. So then what would be the target here? Is it just to get back to those former highs and you take profits, initiate a new position, maybe if we break out? Like, how do you look at the coming weeks and months?
Oh, you nailed it. If somebody wanted to get in here, I had been talking about this once we broke out of that channel, then some kind of missed that first move. I said, well, look, if you're not in, I would wait for a hold of something psychological like that 2,000 mark. Then maybe you can put in a play for a run up to 2085, right? On the GLD, you're going to get up to around 192-ish or something. And that's when I would probably lock in profits. You'd have to think maybe we're going to test that and pull back a little bit, especially if we just keep going straight up like that. Probably a time to take a breather. If you miss that play too, or you're in it and you take those profits, the next play for me would be, taking out that 2085 up top, which I think gold will do.
Let me tell you something. For you youngsters out there, there have been times throughout history where gold actually does go up, believe it or not. I would encourage everyone to go back and look. And in my experience, the gold bugs are actually more obnoxious when gold is doing well than the laser eye people. I feel like the laser eye people took their, they learned how to do that thing from the gold bugs. And for the record, early in my career, it was cool to be a gold bug. I certainly was a gold bug. I felt very cool. So there's a time and a place for everything is my thought process here. And Christian, one thing I love about Christian is Christian doesn't give a damn whether we are buying stocks, shorting stocks, buying bonds, selling bonds, buying gold. He don't give a damn. And I really admire that about you, by the way.
Keep it simple.
Like, whatever, whatever.
But I can listen to you guys talk about it all day. Like you and Steve going back and forth. That's a good time.
At least somebody's listening. I like it.
All right.
Thank you, Christian.
Thanks a lot, Christian.
You bet. Always great to be here.
Adios.
All right, guys. I highly recommend following Christian on the Twitter machine if you don't already. Link to his Twitter /X/ whatever the heck it's called is in the description on YouTube. Okay. Let's talk about
Is that the Brooklyn Bridge behind you, Spencer?
Yeah, that picture's only been there for like, I don't know, 3 months. I
love bridges. I really do. I really do love bridges. I was having lunch with my family Saturday afternoon, and we were right on the Delaware River, and I'm just staring out at the bridge, and my wife's like, "What are you looking at?" It's like, "What are you staring at right now?" I'm like, "Look at that bridge."
Bridges are great, man. Bridges are great. I also love bridges.
Brooklyn Bridge, 2,000 people died building that, so I don't know what kind of masochist you are there, reminding everybody.
I love walking across bridges, and there is no better bridge to walk across than the Brooklyn Bridge.
You think so? You think that's the best bridge to walk across?
That I've walked across. I mean, I haven't walked across every bridge.
No, it's a good one. It's a great pizza joint on the other side, on the Brooklyn side.
Yes, there is.
Great. Grimaldi's. And then the ice cream joint, right? It's like the Brooklyn Creamery or whatever. Woo!
Yep. I was there a couple weeks ago. Let's do some earnings here. We didn't do all that many earnings. We did a couple last week, but we are like squarely in the heart of earnings season here.
It's always earnings season, I feel like.
It's not always earnings season, but it is earnings season right now. You don't have to deal with this for like 3 more months. But here's the calendar for the week. Obviously, the middle of the week, we get AMD. On Tuesday, we get Apple. On Thursday, those are the big ones. This morning, I want to talk just a couple here. I want to talk McDonald's, and then we'll look at Deckers here and a couple from last week. But McDonald's, interesting here. So I like looking for trends within industry groups, right? So we had Chipotle last week. We had McDonald's today, and they are both talking about how their sales and everything was driven by pricing increases, right? They're raising their prices, and that's basically been the driver for them, for these businesses for the past several quarters now. Now, unlike Chipotle, Chipotle saw actually traffic slightly increase. McDonald's saw a traffic decrease. Sales volume transactions decreased year over year in the prior quarter. But again, because they're raising prices, it's no matter, right? They're still raking it in. But it's driven by the price increases and not by like sales volume increases, which I always find to be interesting.
Yeah,
right?
But stop. Are you saying that like, what's the takeaway? Because it's a price increase. What's the point?
It would be to me that's like a sign of a weaker consumer. Okay. If they're making more money because of their own lever that they're pulling and not because more people are going to McDonald's, or maybe not a weaker consumer, but just it's fewer sales, right? It's fewer sales.
It's a sign of struggling performance, I would say. Like we said similar things about Netflix raising prices, right?
Yeah.
They could grow in a number of ways, but now they're choosing to grow through raising prices. This is different. Let me tell you why. McDonald's franchise fee was 4% for about 3 decades.
Right. And they recently increased it, right?
3 decades. They raised it from 4% to 5%. People are going crazy. We're talking about a 1% increase. How powerful of a position is this company in? That if sales slow, or like you're saying, probably a weak consumer, they just say, oh, all right, we'll up the franchise fees. And there's still only
but what if it's fewer people eating McDonald's because they're on these weight loss drugs, and then the extra fat people not on the weight loss drugs are willing to pay more for the burgers?
I did not do a keyword search. I can do a keyword search for Ozempic. I doubt it'll show up.
I'm half joking, but I'm very much joking. But not.
Good for them for not blaming Ozempic, because they probably in this environment where everyone's blaming Ozempic. But you'll see, big, awesome companies complain about bullshit like that. I think McDonald's, what a brand. Oh my God, good for them. Raising prices for the first time in 30 years. I think, it's been a long time coming. And it goes back to that theme of how these mega cap superpower companies have so many levers that they can pull, right, for performance wise to hit their numbers. And that's all this is with McDonald's, right? They're this massive company, and when push comes to shove and the consumer slows down a little bit, they have levers that they can pull to hit their numbers. And that's what they did. That's what they should do, and they'll keep doing
Spencer,
it.
don't look. What's the market cap of Mickey D's? What do you think it is?
Awesome.
150.
It's actually pretty close. It's almost 200. It's like 180, 190.
All right.
JC's buying 20 burgers at a time when he goes to the drive-thru.
Listen, I went to my daughter's soccer practice last week, and on the way home there was no line at McDonald's, and I had a team of hungry dudes. So I was like, you know what? Let me get 15 burgers. And the girl was like, I'm like, yeah, let me get 15 burgers. Let me get 3. And she's like, whoa, hold on. She she was overwhelmed. She like put like an experienced salesperson on the microphone. Like, yes, sir, 15 burgers coming right up. Big spender. I spent $90 at McDonald's. That was like the biggest order they've ever gotten.
Let me take these. Let me take these chat comments. Who eats McDonald's? Gross. LOL. Dude, everybody. Okay, there's a time and a place for McDonald's. A lot of people are obviously eating it. Number 2, McDonald's is just a bad value prop right now. A McDouble is $3. For $2 more, you can get a great. Dude, fast food is an excellent value prop. That's why these companies sell so much of their products.
Not all fast food. Not all fast food's as cheap as Mickey D's.
McDonald's is dirt cheap.
I'll drop $30 at Chipotle easy.
Well, that's the whole point. Nothing is really cheap.
Well, Mickey D's is, to Strazza's point. Mickey D's actually is.
Food is
not as cheap as it used to be.
What is?
Listen, it's all relative. This is far cheaper than any of your other options, and they're going to make sure it stays that way. I think McDonald's is great value, and everybody eats it, and it's a great American brand. Don't talk shit about McDonald's.
It's a great American.
I'm not sure.
Strazza again with these American companies.
Throw them in the same category as Nike. 2 great American brands right there.
Yeah. So anyway, I thought that was interesting. I didn't even give you the numbers, but I just thought the price increases, the fact that their sales were good and their margins were good, was really a result of them raising prices. I just thought it was worth noting, especially in the context of Chipotle and whoever mentioned in the chat Pepsi as well. Thank you for that. So yes, we are seeing a trend, right? The trend is anyone who sells any food of any kind, they are raising prices to make the street happy.
Listen,
so
the trade is exactly the same on both of these.
If
you're above the late 21 highs, you can own it, and if you're not, you can't. I mean, I think the trade is the same. And didn't McDonald's used to own Chipotle? Yeah, right.
No,
but they've had
like a
the
big
CEO.
Shareholder? They were a big shareholder.
Yes, they
Why
were a
is
big
Strazza
shareholder,
shaking
and I think the CEO went back and forth.
100%, dude.
Right.
100%. Let me teach you something, young blood.
Yeah, McDonald's.
In the old days,
they used to have a stake. They used to have a stake. That's
like a huge one.
I don't know. Show me. Okay, prove it.
I'm not gonna go up and look it up. That's what you like to do. You go look it up and tell me, oh, JC, you were right as usual.
Listen, if you've never eaten McDonald's before, you need to ask yourself, are you really living?
Oh my God.
I don't know.
You're not gonna be living for long, is what it is.
I'm not gonna do the super size me diet. I'm just saying every now and then you can have a airport burger. Time and a place.
Listen.
Okay, McDonald's invested in Chipotle in 1998.
Wow.
By 2005, they had a 90% stake, and they sold it by 2006 because Chipotle was not.
Apology accepted, Strazza.
I was 15 years old. I missed.
Listen,
that.
you want to pay attention to your elders, son.
Anyway, okay. What else on the earnings front, Steve? You want to talk about Deckers?
Yeah. These hey dudes, huh? How about that? You any like good tidbits from the earnings call?
This chart, man.
I just don't feel like I've seen too many guidance raises this go around.
Yeah.
So Decker stands out in that regard because the earnings, were good and all, but they raised their guidance, the fiscal year EPS guidance, that is, by basically a whole dollar, like a whole extra dollar in earnings per share across the whole year. And they raised their sales guidance as well by not
Can
as
someone
not that
explain
much
to
distance,
me
but
what the hell these guys are doing for the chart to go from the lower left to the upper right like this? Like,
Yeah, so
wow.
and that's why I'm asking
huge.
Spencer, because typically they'll give like color on their earnings about what are the brands that are like driving their growth right now. It's not Uggs anymore, right? For somebody like
Oh, Deckers
is
owns Uggs.
is it?
yeah, that's their big thing. But I
Uh,
think it's this Sanuk brand now, this beachy stuff, right?
Go
No?
to slide 2, Spencer. Go to slide
Um,
2 quick. I want to just kind of give it. Hold on, let me
Just
zoom
wear
out a
it
little
down.
bit more. Give the people some perspective on this
Sanic?
beast. Look at
Yeah,
slide
Hey
2 there.
Yes, Hey Dudes is Crocs, thanks. But it's the same issue that they're having, Crocs, with these Hey Dudes. Which, by the way, they're like uglier than Birkenstocks. What is uglier? What's worse, Hey Dudes or Birkenstocks?
I don't know what Hey Dudes look like.
I also don't know what a Hey Dude is.
It's bad.
You're Strazza. You're the old white guy. You're like, you know, Strazza acts like an old man. So I would defer to you when it comes to this stuff. So
Whoa.
you tell me.
Okay, I'll tell you, Steve, what their brands were. It wasn't Sanuk's, or maybe Sanuk is still growing, but
Yeah,
the growth has come off a little bit.
okay.
UGG brand sales up 28% year over year. I don't know what Hoka is, Hoka. I have no clue what that
How
is.
is that?
They're up. What is that? What?
Yeah, how's Hoka doing?
Up 27% year over year.
Wow, okay. So it's not.
Teva brands decreased. Sanuk decreased.
Really?
Then the other brand, I don't know. Other is Kulabura. I don't know what that is. Down 7%. So it was Uggs. Apparently, it was Uggs.
Okay, so I was wrong. It's not Sanuk. Sanuk's not even material, right? So of their total revenue, which it looks like comes in around what 2.4, 3.5 billion. 1 billion of it is Uggs, and another billion of it is this Hoka. Hoka's like as big as Uggs. So if they're both growing that much, that's about 2 billion of their total like 3.5.
Spencer definitely wears Uggs. You got Uggs, right?
Are Uggs back?
Did they ever leave?
What is a Hoka though? I haven't seen these in the wild. I don't think so.
Here, let's look it up.
We'll smoke out of one of those next time you're in town.
Oh yeah, they're running shoes. Oh, those look nice actually. I would definitely wear that.
Casey, Google the Hey Dudes. You got to see these things.
Didn't you just tell me they're so ugly?
Yeah, they're like they look like bowling shoes.
I have a proposal. Can we run down the futures markets and talk about the hot corner, how they're buying more regional banks? Can we do that?
These Hey Dudes here, hold on. These Hey Dudes don't look like they don't look that ugly here.
I know, Chris.
These don't look that bad to me.
Spencer wears the ones on the right over there. You like those, all right?
Dude, they're huge. They're huge. I don't know how people aren't
all right
falling over themselves.
Whoops.
I got a buddy who golfs in them. He looks so stupid.
All right.
You look so good on a golf course, guys.
I look like I am so good at golf, and I'm proud of that.
Yeah. It's 9:30. JC, why don't you run through the market here?
All right, as the market is opening up here, we have the Dow futures up 250 points. How about that? S&P futures up 32 handles, which is about 80 basis points. NASDAQ 100 up 100 points, 70 basis points, with bond futures muted. Not much going on there. Gold's up $12. Silver up 3.5%. Copper up 1%. Oil down 2%. Natty gas down 4%. And the dollar mixed slightly down here with volatility coming off and interest rates pretty much flat, slightly higher here on the U.S. 10-year yield. And that is the Dow market futures brought to you by.
What stands out? Care about any of this?
What stands out the most is, to me, the dramatic outperformance out of silver relative to gold. Gold up 50 basis points, silver up 350 basis points, putting up 7 times the return this morning in an environment where the dollar, in my opinion, is very vulnerable to break here with that divergence with rates. And if that U.S. dollar index breaks below 105.5 and it's flirting with it, then I think these precious metals are going to run gold to 3,000 and beyond. And the one thing that's been missing, one of the things that's been missing, to be more clear, is that we have not seen any sort of silver outperformance over gold at all which is something you normally see historically when precious metals are doing well. You see that outperformance out of silver. We haven't seen that at all. We've seen just underperformance. So what stands out to me personally, it's that. So I'll be looking to add to gold positions this week for sure.
The flows in TOT are like off the charts right now. I look at TOT as I look at TOT down again, right?
Yeah.
Wavy's asking if anybody's noticed a trend. Bonds down, dollar down. Hello, we've been talking about it all week. Come on, of course. Yeah, very interesting. Why are you shaking your head?
Dollar down? What are we talking about?
Yeah.
Dollar's been sideways.
First of all, the dollar peaked a month ago.
Dude.
What do you mean, dude? The dollar index peaked on October the 3rd. It is now October the 30th.
So it peaked at 106.99 a month ago, and today it's trading at 106.30. Sure, yes.
Interest rates went on to make new highs on the U.S. 10-year yield, and the dollar did not, which is what Wavy's talking about.
So what's the takeaway? Rates are going to catch sideways?
The takeaway is that they've been moving together, and there's a divergence that should be front and center.
Yeah. Listen.
Wavy's right. Strazza's wrong. Good luck, Wavy.
I have no horse in this race. It's not something I'm really thinking about.
I don't have a horse in the race either. The dollar could go to the moon or to zero. I don't give a shit. I'm just telling you that the dollar index peaked a month ago.
One's consolidating in a sideways form. The other one's kind of like inching higher. I guess they're both consolidating to me.
Okay. Yes, Wavy, I noticed. Some of us are paying attention.
Okas will
we talk about the hot corner. Speaking of paying attention, these guys keep buying regional banks. What are they seeing?
I do have a horse in this race. Let's run the bumper. Let's talk about this.
So hot right now.
So, full disclaimer. I am conflicted. This is my bank, JC. What say you?
What bank?
M&T, baby. MTB.
You're not bankless? You're not living a bankless life?
Oh, I do want to eventually just bank fully with Apple, but we'll see. We got to get there first. M&T Bank, not by choice. They acquired my small community bank from Connecticut, People's United Bank. So M&T, my account just became like an M&T account one day. Spencer, we were talking about this the other night. So MTB, why do these purchases stand out? Let's throw up the chart here. You know, we talked about this theme of the chief financial officer simply having the best, the most complete information, but also knowing what to do with that information. In other words, JC will come on here and say, oh, the CEO probably knows more and is more important. Definitely. It is literally the CFO's job to care about the stock price, to care about where the street is, to care about earnings estimates, to know where the company's actual numbers are going to come in versus those estimates. The CFO is in the best position to understand the reaction of the stock based on the company's performance, right? Literally his job. He's supposed to worry about. CEO's higher level has more important things to worry about. CFO purchased in June about $1 million worth of stock. Now he's averaging down, buying these lows again. 1.5 million, probably more like 1.7 million, I think, combined since June. That's no small chunk of change for an executive. So
that's official.
Totally stands out. You do have a very, clean and clear level here to trade against around this, 108, 109-ish former lows. But if you look at some of the other banks, this is a super regional, by the way, right? This is one of the big regionals that we should really care about right now. If you look at some of the other banks, we have resolved these ranges lower already. If you throw up, Fonz, my bank's VWAP chart, which is somewhere lower in the deck, let's just look at the state of the banking indexes. I think it's tough, and this is my
this used to be a $40 billion company.
Yeah, man, they've been hurt. All the banks have. But this is my pushback to JC when he says, "Oh, I'm out here looking to buy stocks." I'm saying, let's get 1 day of stability, right? Let's have the market stop falling before we step in and put on new longs. For MTB, it's the same thing. With banks below the VWAP, I'm thinking to myself, these indexes are going back and they're going to retest those year-to-date lows from May. Do I really want to be stepping in and buying a bank, even if the CFO is buying? I don't know. I kind of want this group to prove itself to me first. before getting involved. I got stopped out.
First of all, you want to wait for stocks to stop going down. The day that the new 52-week highs list peaked, since then, United Healthcare is up 20%. So I'm not waiting for stocks to stop going down. I'm actually observing the ones that have been going up this whole time.
Yeah, stocks are getting crushed, so I just don't want to like step into the middle of this.
Your stocks might be getting crushed. What does that have to do with United Healthcare?
Most stocks are getting absolutely annihilated.
Right. And United Healthcare is up 20% in that environment. What does that tell you about the underlying strength in UNH?
Good at cherry picking, but that's not like the conversation.
I'm cherry picking. I'm telling you. You asked me what I'm doing. That's what I'm doing. It's not cherry picking. It's acting. It's getting involved.
You're picking like a low volatility defensive name and being like, oh, UNH is doing great.
Yes, healthcare defensive. It's been showing. Is it?
UNH is defensive. Yeah.
It is. It's one of the best performing sectors in one of the greatest secular bull markets in American history. And you're telling me it's defensive?
Insurance is defensive. Yeah, sure. They're products that people are going to buy anyways. Right?
What does United Healthcare have to do with insurance?
Insurance is like a staples product.
Who's talking about insurance?
Health Healthcare is health insurance.
It is healthcare services.
What do you think UNH does?
First of all, I have United Healthcare, for the record.
Are you trying to sit here and tell me UNH is not health? I'm not having this conversation with you.
UNH is healthcare. It's the largest component. It's 10% of the Dow Jones Industrial.
It's healthcare. Finish the sentence. Healthcare insurance. Right. Okay. Okay.
Provider.
Oh my God.
They're not the insurance. They're the provider.
What?
They're the provider.
I can't.
What's the weighting of UNH in the insurance index? Let's see.
Dude, you cannot live. You cannot live your life like this.
Oh wow, what do you know? UNH is not even in the insurance.
You can't
index.
live your life by the weightings in
why.
these indexes.
I can't imagine why UNH is not in the insurance index. It has a 0.00% weighting in the insurance index.
This is no way to go through life, JC.
Financial insurance, you asshole. Come on. You know that UNH is health insurance. And
I don't shit if it's an energy stock. It's up 20% during this correction.
All I'm saying, my only point is that obviously UNH is a defensive stock because insurance is not a product that you go buy with.
UNH is not a defensive stock. It was one of the biggest winners during the best secular bull market in American history. And I'm not going to buy that shit.
And one hole just explained to you why that was. There was something very company and industry.
Oh my God, are we going to talk about Obamacare?
Yes. Yeah. Everybody knows this. This is like a
you know that Rick Ross song, "Bullet Wounds Not Covered by Obamacare." You know, that's a great line.
Oh, don't know that one. Thank God.
You don't listen to Rick Ross?
No.
He's just the boss.
Miami. I just started living down here. I'm not a Miami person. I didn't grow up listening to Rick Ross. We had Biggie Smalls.
I hear that every day he is hustling.
I know that one. I know the Port of Miami. Yeah.
You old white men from Connecticut got that one? Maybe.
I always say when I was down in Florida and I was listening to the radio, every other station, it was either country or Pitbull. Country, Pitbull. Country, Pitbull. That's all I listened to down there.
Yeah, but you weren't in Miami. You were in Florida.
Pitbull.
Yeah, it was just country and Pitbull. But those are my options, right?
As you go further north in Florida, you actually go further south. You know.
Yes,
yeah.
that's right. Great point.
Up 2 points. Yeah.
Pitbull is huge in Miami, man. Pitbull like owns Miami. Seriously,
he's Mr. 305.
Like he's a big deal down here. Yeah. People love Pitbull.
All right. All right. That was fun.
So that's anything else standing out in the hot corner or no?
No, that's it.
M&T Bank.
It's interesting. You know, there's a lot of these ranges, and the lows are being tested. It's one of those situations where you can make a checklist, and the more and more that start to go, you can err in that direction that the others will follow. Yeah, I know. We're really good at what we do.
John doesn't like it when we argue. But if Strazza would stop saying such dumb shit, I wouldn't have to disagree with him all the time.
You're mostly wrong when we're arguing.
You're literally telling me McDonald's didn't have a stake in Chipotle. They own 90%.
Hey, I learned something.
That could not have been more wrong.
You know, when you look at what a tremendous...
Also, you said you look good on a golf course. Also, again, could not be more wrong.
I look so good. People love golfing with me. I'm like the most fun person to go golfing with.
Why? Because we were like in the 13th hole and we were like, screw it, let's go to the bar. I like that.
Really good time.
Wait,
yeah.
Wait, JC, do you actually just like live your life like, but you categorize companies by their weightings in an index, and that tells you what kind of business they're in?
No.
99% of the time, sure, yeah, mostly.
Sometimes he uses it to make his
All
point,
right.
and other times he'll ignore it.
No, I think it's interesting
All
how
right.
sometimes like there's like Strazza is good at this, at like pointing out, when you look at like an energy stock that doesn't look like any of the other energy stocks, like Strazza's like, cause they're like in the software of energy, so that's why they look different. Like that's really interesting to me. What's that uranium stock? It's like a utility stock, but it doesn't look like any of the utility stocks. It looks like a uranium stock.
BWC.
Like those are interesting to me.
When the charts look different, it's usually because the company is different.
Like
right?
Walmart. Why does Walmart not look like the staples? Because it ain't a staple, probably, right?
Yeah.
Why does McDonald's,
I don't know. Walmart's
not look like
everything.
consumer discretionary? Because it's probably a staple. I don't know.
There are examples like in every sector where it's like, why is this one different? And then you look under the hood. What does this company do? Oh, they're not actually drilling for the oil. They're delivering the oil. Oh, okay, right. Like it's little stuff like that.
Yeah. So no, I don't live my life that way, but I lean in that direction.
All right.
Like a shoulder lean.
All right. Okay. Enough references for one day. Should we do chart report?
I think we should. Brian
All
Shannon with the chart of the day.
Yes, he did.
Be Shan. So we don't have any of the homies joining us today.
I don't know about homies, but can I just talk about just the chart of the day, the quote of the day? I don't know who John Maxwell is. I'm sure he loves his kids, but the quote, "Sometimes you win, sometimes you learn." It's a great quote, right? Who's John Maxwell? Anybody know who this guy is?
Author and orator.
Author and who?
He's an orator. That means he's
What
a
is
public
that?
speaker. He's a public speaker.
Oh, are we orators? We speak publicly.
I don't know.
Sometimes you're an orator when you give presentations. That makes you an orator.
Wednesday, December the 6th, New York City. Be there. If you don't have the invite, email Spencer. He'll send it to you. Everybody email Spencer.
You can email me. That's fine.
Good question in the chat. What
Are you coming, Spencer? It's going to be open bar.
Oh, well, in that case.
December 6th. It's a Wednesday.
Let me address the technical question in the chat.
Please.
What parameter do you guys use for VWAP? Mine shows, I don't know what that means. VWAP is not an AVWAP. Typically on your charting software, if it's just a VWAP, it will start at 9:30 every morning. Right? That's the traditional VWAP. What Brian did with the anchor VWAP was just make that same indicator in a way where you could anchor it or pick where it starts.
Yeah, but Strazza, depending on the software, you can anchor the VWAP to the first print, which could be like a 4 o'clock in the morning, stuff like that. It depends on your software.
It's the beginning of each day, typically, the VWAP. Sure, you're right. They'll include pre-market stuff.
Yeah.
But that's probably the problem because the way the AVWAP should work is you're just picking a date where you're dropping it, and then it's going to look the same. There's no like periods or anything like that in the VWAP. It's just the start.
You can anchor it to any point you want.
Yeah, that's right.
And if your software doesn't let you do that, you're using the wrong software.
Yeah, it's free in a lot of places now. Go ahead.
All right. So anyway, it's funny. My interpretation of this tweet, the keywords for me are short term, right? Like this doesn't look good. So yeah, maybe this is a signal of a short term reversal, but beyond that,
okay. Here's what's important about this. Brian is taking the VWAP from the 2016 low 7 years ago. So the average buyer off of that low is now underwater. That is just a very good way to illustrate that sellers are very much in control.
Yep.
Going back 7 years, the average buyer is now in a loss position in small caps. How's that for a bull market?
What about Amol Desai? All the way down at the bottom, showing the gold relative to the S&P 500.
Oh, wow.
Yeah, Steve, don't worry. Steve will come back to you.
What happened?
Steve will come back to you. Don't worry.
What did I say something?
No, Steve is. You have to. We scored right past Steve. It's okay.
Oh, did Steve make the top 10?
Yeah,
Wow.
that's all right.
Oh, snap. I didn't even see it. Oh, we already used that chart. All right, congratulations, Steve. You made the top 10. You're down at the bottom. For us, the better stuff is up at the top links. The second one there.
Yeah.
All right. Do you have anything to say, or you already said it? It was a great chart, by the way. Good chart.
Momentum hitting oversold twice in 1 month stands out to me too. We didn't really talk about that, but
agree wholeheartedly. The market is messy during a market environment and time that it's supposed to be messy. Can't believe
it's like, one little slight oversold reading. Okay, you can kind of let that pass, but 2 in the same month is it really speaks to the aggressiveness of sellers here, and it's not something you should expect to see in a bull market. So I think we have transitioned to like a really messy place now, messy at best.
How about the Amol Desai? It's a great chart.
Yeah, go.
Just reminding everybody what opportunity cost is. A lot of people just fail to keep in mind opportunity costs. Over the last 12 years, you could have bought anything.
He's also
and made money.
He's reminding people, I think that's the bigger point, just how bad of an asset gold has been to be in for most of my career.
And a lot of the kids that entered the market over the last 10, 12 years, which is a lot of kids, they're like, gold? What is gold? I thought Bitcoin was gold. Like, they don't know.
Do you think, JC, like what kind of advice would you give close friend or client if they said, should I have gold in my portfolio? Where do you stand on the everyone should own some gold argument?
That's the dumbest shit I've ever heard. Yeah. I think that there's a time to own gold.
Yeah.
In the last 12 years wasn't that, by the way.
Yeah. Okay.
I always owning gold, I think is idiotic.
Yeah.
I think there's a time to own gold and a time to short gold or not be in it at all. I think like any asset, I don't think you should always own bonds either, as the market has reminded everybody over the last few years. There's a time and a place. 60-40 portfolio is dumb. Completely ignores commodities. Sometimes you want to ignore commodities. Sometimes you definitely don't want to ignore commodities. So I think if I'm going to give advice to anybody who's new to the market, is go back and study the last 100 years. You don't have to go to 3000 BC. Just the last 100 years, you got enough data. Understand the cycles. Understand that markets trend. Sometimes they trend up. Sometimes they trend down. A lot of times they trend sideways. Like, just understand history to help put the current market environment into context, I think is a huge, huge life hack that most investors, you go one by one, ask 100 investors, 99 of them are going to tell you they've never done that. Probably more. I don't know why. Like, just take the time. One day, go back and check out what happened.
Gold to me is just like any other commodity, right? Like, we're up here talking about uranium and coal and oil and gas because that's been a great place to be for the past few years. Gold will be, in that conversation one day, but it shouldn't be treated special. Not a currency.
And it's not a safe haven. That's another thing people get confused. Quite the opposite.
It's a commodity that should catch rotation in a commodity bull market, and that's the time when you want it in your portfolio.
But
like, we talked about coal and uranium stocks on here. I think it's important to point out that's not like a set it and forget it type of investment. You don't buy these cyclical stocks or these commodity stocks and just like put them away in your IRA and be like, yeah, I'm just going to own coal for the next 20 years. No, it's going to be a terrible investment one day.
Gold, not a safe haven asset. Gold, not a hedge against inflation.
No, right. It's none of the things they tell you it is.
But it was though, like way back in the day.
No, right? It wasn't. It just went up in an environment where inflation was high, and that one time is what all these idiot gold bugs keep pointing to.
Okay. So it was once upon a time. That's why.
No, it wasn't a hedge. It just went up during that environment, so they think it's a hedge.
Right.
So it was a hedge that one time. That's the point.
It wasn't a hedge. It just did well in that environment.
That was an attractive way to sell the asset and to spin the story, right? And they created a huge industry around gold and selling gold and gold bars. And you've seen the commercials on Fox, right? Like, it's a huge thing. And that's the story that they had to tell people to make people interested. And they did a fantastic job at it. Wall Street.
Mark is right. Mark is right. Think of gold more as a currency. Could not agree more.
Maybe a shitty one. Maybe a really shitty currency.
I had a shitty currency the last 12 years. A pretty good one these days.
Yeah.
Listen, there's a lot of shitty currencies out there. So don't,
We live in the United States of America, we're so lucky. We take this for granted so much. People in other countries, I talk to them, it's a problem. They have to hedge out the exposure to their own home country currency. We have the strongest one, the best one. It's in a secular uptrend. It's always been. We are so lucky. We don't have to worry about that. You hold dollars. You don't go put it in gold or some other currencies. We have dollars. That's our home country currency. We're very lucky. It's the best currency. And it doesn't look like that's going to change anytime soon at all. These other countries are trying to like band together, create a new currency. It is failing miserably. We've seen this experiment before. Go talk to the ECB. Look what a disaster they made over in the Eurozone. It's hard to compete with US dollars. We're very lucky that we get to hold those without even thinking twice about it.
It's true. It's true. All right, let's do some recess.
Already? Oh,
Yeah, already.
okay.
Let's go, baby. We got work to do. Let's go.
Talk about football.
Is that what we're going to talk about?
I didn't realize we had 8 minutes worth of recess, but okay. I guess it's recess
It's
time.
gonna be a long week, Spencer.
It is.
Okay.
So I went to a Halloween party, and I was dressed as Sleepy,
Ooh.
and my daughter was Snow White, and I've got pictures. I don't necessarily like sharing pictures of the kids, but
Yeah, okay.
for it. There were some adults that there were a lot of adults that did not dress up. They thought that they were too cool, and they were like telling my wife like you're so lucky that your husband dresses up, and she's like, oh yeah, I'm the lucky one. I like Halloween. I like dressing up for Halloween. I always have. What's wrong with adults dressing up for Halloween?
I mean, listen, you live once. Have a little fun. I dressed
Have
up.
some fun.
So what were you again?
I was Sleepy, so a dwarf.
Got it. And so Alexander?
My daughter was Snow White,
Yeah.
and the twins were also dwarfs. And my wife was the evil stepmother or the evil queen, or whatever the bad guy is in Snow White.
Oh, that's cool. That's cute. Yeah.
And then tomorrow on Halloween, it's their birthday. The kids turn 1 on Halloween, and they're gonna be
wow.
Lloyd Christmas and Harry Dunn.
Wow.
Dumb and Dumber.
That's great.
That's fantastic.
That's excellent.
Yeah.
You should see these outfits.
So
man. They are fun.
So you have like a little orange suit?
And a little light blue one. Yep,
Send pics.
it is pretty awesome.
Oh my goodness, that is tremendous.
We're not giving them canes because they're gonna beat the hell out of each other with it. So you know.
I dressed up Saturday. We had the Fantasy Fest going on.
Did you put any clothes on, or you just walked around naked like the rest of the people
It's
there?
a very naked event. It's not kid friendly. But Rose was all decked out as a Giants cheerleader, so that made my life pretty easy. I just had to throw on a jersey. But like I did a little more. Like I had the socks and stuff.
What jersey did you wear?
I did like one of these instead of two because I looked like Nelly, so that was pretty cool.
Were you shocky?
No, I have an '88 Strazza jersey. I was Strazza. Yeah,
Wow.
custom.
Never been a big Halloween fan. Even as a kid, I never like like a sports jersey was my costume like every year for like 10 years in a row. You know, it just like,
What are you dressing up as
never
this year?
really- I'm not. No, I think you know what it was. I had like a traumatic experience with a costume as a kid, and I wore it to school, and it like ripped, and I had to wear like a ripped costume like all day long. And I was like, "This is stupid. This holiday is dumb. I don't need to do this ever again." So I like
Spencer gave up on Halloween.
I
20
just
years ago.
yeah, Halloween just not. It's not really my thing. Never really has been my thing. You know, but to each their own.
No, I always get pretty bummed out living here because just the community that I'm in, I'm not in like a 55 and older community, but it is like gated and there's no kids. So I always get excited to like hand out candy, but I swear to God, I might get like 2 knocks.
You know what we do? You know what we do in our neighborhood? My whole neighborhood meets at the top of my cul-de-sac, coincidentally, which makes my life easier. And it's like a tailgate party.
Yeah.
Everybody brings like tables. There's no football game. It's just a tailgate party. And, you know, they walk around the cold because my neighborhood is really hilly. So if you got like little kids, it makes it harder.
Right. You got to like walk up through the yard.
But the last few years, like I've brought really good wine. So now like all the adults are like, oh, JC, bringing the wine this year. So the pressure's on.
JC wants the other dads to like him, so he just brings good wines to the party. Now he's got a bunch of friends.
I don't bring much to the table, and I definitely don't want people to know what business I'm in. So I don't want them, because if they once they find out, they're like, "Oh, JC, I got this one stock." Da, 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 da. So I tell people I'm a plumber, and lately, just I'm in the wine business because I am in the wine business. I just leave it there, you know. I own a winery.
Oh,
that's
like,
okay. That's my new move. I'd rather talk about wine than the market if I'm at a party.
Just tell people I'm an accountant. Nobody wants to talk to me. That's been a great move. Yeah.
I know you're not an accountant. I don't want to talk to you. So
yeah, right.
I can only imagine.
Maybe it has nothing to do with that then.
All right. My recess is more of a PSA. So twice a month, JC does these conference calls, right? He does them start of the month and in the middle of the month. And these are traditionally only for members of All-Star Charts Premium. In fact, actually, they always are for members of All-Star Charts Premium. But once a year, JC will, open up, go into his cold, dead heart and open up the call to the masses. And that once a year is going to happen this week on Wednesday, which is the 1st, right? This Wednesday, November 1st. JC's
a long time.
Yeah, right. So what I'm going to do is I'm going to drop the link into the chat right now. This is a link to sign up. And in signing up, you will get the link to the call emailed directly to you. So I just dropped the link there. It's right there. You can click on it in the chat. And like I said, the conference call this Wednesday, 6 p.m. Eastern time. It's what JC does twice a month, every month. The difference is this time he's actually opening it up to everyone, so you can kind of get a feel for what he does. And yeah,
too long-winded. It's some of the best content we put out. Be there.
Yeah, this is it. Everything we do throughout the week, all of our team meetings, everything boils down to this. Peter and Mary speak to all of our customers. They have for years. It's unanimously the best part of All-Star Charts Premium is joining us for these calls. And in the old days, like 4 or 5 years ago, we used to open it up maybe a couple times a year, maybe 3 times a year, believe it or not. And we just, I honestly don't even know why we haven't done this in years is really the truth. We haven't done this in a long time. So everybody get involved. Click the link so you can register for it. I will see you there Wednesday live, 6 p.m. Eastern time. And just want to give a quick shout out to Billy Cunningham. Wife is due tomorrow. God bless. Good luck. Hope everything comes out all right.
All right. If we don't see you on the show, Billy, we'll know why.
Halloween babies are awesome babies. I got 2 of them.
Guys, just want to mention, since it's a Monday show, this is a Fed week. So Wednesday, Thursday, we hear from J-Pow. I think we took October off.
Tuesday, Wednesday, I think.
These guys talk too much.
No, Wednesday,
Thursday.
Would
it be awesome if we had a mute as the Fed chair?
No, this time, like what they say really, I mean, I guess it always kind of matters to an extent, but like, it's not about what they do; it's about what they say. Because we know what they're going to do. The market knows they're not going to move rates at all.
Bring Neto in. Bring in Neto tomorrow.
Yeah. But again, it'll be about what they say. Because the bond market is crazy right now, and they have to address that, right? So, all right, we'll see what happens. All right, it is Monday, so we do have the Flow Show coming up a little bit later on this morning with Steve and Sean. That'll be at 11:30 a.m. Eastern time. Stay tuned for that. And that's a wrap for us today. Thanks to our guest, Christian Tharp. Thanks to all of you in the chat. If you would be so kind and just hit that thumbs up button for me, I would appreciate that as well. And we'll see you guys later. Go make some money, all right? Have a good one.
Adios. Good luck, Billy.
Bye, buddy.
Run it. I can't take no loss. I don't even know what it costs.